All right, it's good to see all of you here. And Dr. T specially prepared this video here, right? Later on will be recorded as a video, but right now I'm actually sharing as a live session. Okay, so Dr. T, so what's our topic today? Okay, the focus today is actually on this Singapore financial giant stocks. Okay, as we know that Singapore, is famous of these three major banks, right? DBS, OCBC, and UOB. And what happening right now, right, with this inflations going on and potentially increase in the global interest rate. So therefore, right now, there's actually a sector rotation, right? From those, for example, like tech stocks, more towards the value stocks. And as a result, right, this Singapore market, is getting more bullish. So it's quite timely, right, for Dr. T to share with you, right, these 6 financial giant stocks. And later I will actually go through, right, the details with you one by one. Okay. So later on through our case studies, we'll cover this DBS, OCBC, UOB, the 3 major banks, followed by this SGX, right, Great Eastern, and this UOI, right, 2 on insurance, 1 on this exchange. All right, before we start further from here, right, just a disclaimer that right, all this is sharing is for educational purpose, right? So Dr. will show to you how can you actually make decisions, and you can actually align to your unique personality, whether long-term investing or short-term trading, it doesn't matter. Okay, so we continue here. This is just a quick introduction of Dr. T. I have 20 years experience. All right, at the same time, I like to share my experience with the audience. Okay, so regardless where you're joining from, right, whether from Facebook, from Dr. T webpage, you can also visit my webpage at ein55.com. Right, you can download the free ebooks, right, and also you can attend a available webinar, which is a longer version. And today I'm actually sharing a shorter version, right? Okay, so let's proceed from here. So pandemic is a crisis, but crisis also create opportunity. So that's why if we look at it in a more positive way, right? For those who can actually take advantage of crisis, they can benefit from that. But it has been 2 years since the pandemic, so is the opportunity still there? So that's why this is today, all right, one of our objective, right? But before that, Dr. T would like to introduce the strategies. But before that, what are the current factors worrying, many of you? One of them is actually the high inflation. In fact, last month in January, USA has a 7.5% inflation. Although this is not yet the hyperinflation like in 1980s. At the time, inflation could be over 10%. But this 7.5 is already critical alert for many people. Why? Because those things you buy become more expensive. Okay, at the same time for the Fed, right, to actually calm down this inflation, one of the tools they have is actually using interest rate hike. But a lot of people worrying, Dr. T, what if the Fed starting from next month, right? Because they have a plan probably in March, right, 2022 to start increase the interest rate from nearly 0, right, onwards. So therefore, some of you worrying that could be a potential this so-called reversal, right? What if the market actually coming down? Is it possible, right? I call this as a blessing in disguise. Why I say that? Because if you read historically in the last 30 years or even longer, right, every time the interest rate increase, from lower level, right? There's a one round in 1994, right, around 204, and then again in the 2015. So every time it increase, the market actually still enjoying roughly 3 to 4 years of a bull run. So what does it mean? it means that what you're worrying may not be true, right? So that's why it's important, for you, right, to take note that opportunity is only for those, right, who are prepared. So we come back to this chart here, right? So what's the important takeaway from here? So number one, inflation, although it's alarming, but you have to understand the merchant also benefit from inflation. They can charge a higher prices, right? At the same time, higher inflation implying higher income, right? But of course, one day, right, the last straw will break the camel's back one day, right? There will be a black swan may wait for us, but it may not be immediate. Okay, but there are some sectors already under correction. For example, the tech stocks, right, could even fall down 10 to 20% in US. Even Facebook, right, could fall down so far, nearly 40 to 50%, right? So that's why even a good growth stock may not be sustainable, right? Not to mention when market is worrying about potential war, right, going on, right, let's say between Russia, and Ukraine, right? Although behind could be the Western world. Okay, but all this no one can predict exactly the unpredicted market, but we, right, can actually find, certain this trend or higher probability to do investing or trading. Okay, so that's why with this in mind, right, we will convert the so-called the crisis, right, into potential opportunity, right, through our today topic on this financial sectors in Singapore. Why Singapore? Right now, not only there's a sector rotation, there's a country rotation as well, right? Why I say that? Because Singapore, Hong Kong, or even in Malaysia is full with this, we call it the value stocks. For example, right, financial stock, bank stocks, right, this is property stocks, and so on. Traditionally, they may not actually, right, grow as fast as this the tech stocks in USA, but they are more sustainable, right? So right now, right, the cycle is back to our home country here, huh? Okay, so before we start, let's start with some foundation first, right, Dr. T, right? What is your number one belief? It must be a giant for a stock, not necessarily the biggest company, but it should be strong internally. At the same time, right, we let the giant fall down, meaning wait for correction, but don't go in too early, right, because you may catch the falling knife. So instead, we wait for the reversal, right? So we can actually integrate both investing and trading together using this simple three-step approach. At the same time, this is probably the most important for today. One of Dr. T 55 styles called the Optimism Method. So Dr. T, what is it about? Basically, it's showing you, right, the market low and high. But before that, you need to actually understand the intrinsic value over here. Once you define the EN55 intrinsic value, then you can define the low and high through the optimism from 0 to 100%. For example, you can buy lower than 25% optimism and hold it between 25 and 75 and sell above 75% optimism and wait for correction again. This is a so-called market cycle, right? So it means that, right, we buy during winter when other people are not interested, all right? And we sell during summer, like in the bull market, right, when people crazy to buy high. So this is like what Warren Buffett said, right? Be greedy when other people are fearful, and then be fearful when other people are greedy. Huh? Okay, but what the Warren Buffett teach you is actually qualitative, right? So exactly how to buy low, sell high, right? So how to measure the greed and fear, you can actually go through this quantitative way called the optimism, which later I'll show to you, although this is just one of my 55 styles. So regardless of short-term trading, medium-term trading, or even long-term investing and lifetime investing, all can apply this technique. Right, for example, you buy a lower here at low optimism, your upside is 75% probability of winning, although you got risk of 25%. This is called the risk to reward ratio, right? Around 1 to 3 or 25 to 75. So that's why optimism is a probability calculator, right? So it means the whole fish, we just need to eat a big chunk from here, between 25 to 75%. Okay, and of course, right, that can actually vary further, right, through short term to long term, right? So later I'll give you, various positioning based on different personalities, right? But before that, you may choose one of the 4 strategies. Number 1, buy, for example, like an apple at $1, the value, right? And then you buy at the same $1 price and hold for long term. So it's as if, right, you're a shopper, right? You don't care the low or high, right? You see the opportunity at a fair value, you just buy and hold, right? So this is called value investing. Whereas the cyclical investing, I patiently wait for opportunity for the $1 same value of apple to fall down to 50 cents, and then to buy at that we call it the unfair price. Okay, it could be half the price or even lower, right? And shorting could be the right approach. If you see the share price or the apple suddenly one day drop to 10 cents, but you see a rotten hole, then it may not be a good choice for you to buy low, sell high. Right? Instead, you may even consider to do shorting. And the last but not least, growth investing, meaning the apple, in fact, grow 2 times bigger, but the price is still at $1. Right? You may not see the undervaluedness, but in fact, this is one form of a discounted asset strategy as well, right? Or this cyclical strategy, right? They are common in these 2 strategies, but one is through the share price discounted. One is through the higher growth in the value. Okay, so which apple do you prefer? You may actually comment in the comment section, see which strategy do you prefer. Although probably in our today's session, we probably are focusing more on the value investing and cyclical investing, mainly due to the Singapore market, right? If you are in this US market, you may focus more on the growth investing. But since US right now, right, the market is getting more bearish, while the Asia market, right, today we're focusing in Singapore, right, but in general, even Malaysia, Hong Kong, right, is also recovering well. All right, so that's focusing on Singapore, right? And then after that, I'll extend to 6 giant stocks in the financial sectors, right, to show to you the current opportunity, right, for you to potentially take one of the actions, buy, hold, sell, wait, or even shorting. All right, so Dr. T, what's the current outlook? In the longer term, if you apply Dr. T optimism, right, 0, 25, 50, 75, and 100% optimism, this is STI for the last nearly, right, 30 years. So the optimism right now is actually 47%. So 47 meaning is quite near to the fair value here. So during pandemic, right, year 2020, it fall down to, right, the low optimism unfair value price. In the 2008-2009 subprime crisis, in 2003 SARS and Gulf War, and then after also during this Asian financial crisis, right? So that's why, of course, look back, right? Everything is correct. The important, right, is to be able to take action over here, right? Many of Dr. T's students could actually take advantage of here when other people are fearful, right? They in fact, right, become greedy here. But of course, right now, since the market has become fair value, you can still invest or you can still trade, but your strategies, all right, you need to actually fine tune it further. It's no longer same as like 2 years ago. You can close one eye, just buy. Okay. At the same time, these are the historical high optimism, potentially for you to sell, but it doesn't mean that high optimism, you must always sell. In fact, at here, for example, you can actually perform shorter term trading. Shorter term meaning, right, if the signal reverse, right, even within a day, right, you would get out. But some people are long-term investor. In that case, right, if the market hit a higher optimism, you may need to consider to reduce a position and so on. Okay, so buy low, sell high. Right, this is so far here can show a simple back testing, 100% accuracy. But not all the markets, not all the stocks suitable for cyclical investing, right? Cyclical investing is just one of Dr. T, right? 55 strategies. We also got growth investing. You can buy low and hold for long term, right? You can also have trading, which potentially you can buy high, even sell higher. For example, through momentum trading. Huh? Okay, so this is a long term, right? Looking for every 5 to 10 years, the best opportunity, right, to this invest. But some may prefer, slightly shorter term. Instead of long term, they go down to medium term. Medium term, we look at every few months, there's opportunity, right, to buy and sell. During pandemic crisis, right, there was a good time to buy low as well. But right now, optimism is getting one of the highest for medium term. So Dr. T, does it mean I need to sell it now if I'm a medium term trader? Not yet, because right now, right, Dr. T has updated to the latest price today, right? So it's not yet, right? Although there's a small, right, this STI come down, I don't even call it correction. Right? In fact, we just have a breakout, right? Roughly a week ago, breaking 3,000 to 3,300 points. So that's why if you are integrating trading into investing, right, you may not need to actually get out, even optimism is high. All right, so now we move on to the short-term trading. Short-term is the same thing. At the high optimism, short-term, we are talking about a cycle of every few weeks to buy low, sell high. Although this is a little bit alarming for some traders, especially if you're doing swing trading, right? Yes, we do need to get out sometimes, but that has to depend on individual stock. Even for STI, right, you probably still need to observe like in the next few days, right, before you considering, right, to close your position, especially if you have entered in the last few weeks, okay, to take profit from there, okay. So whether you're short term, medium term, or long term, right, each of them has their unique cycles. But you need to have something in common, right? It must be a giant. So Singapore STI consists of 30 blue chips. In general, it's a giant as a country. So that's why when the giant fall down, it could recover. So that's why this is like a no-brainer way, right, to make money. When you see a giant, especially falling down below the green line or the 25% optimism, creating the risk to reward ratio of 1 to 3. Okay. At the same time, let's move on to, before we go to our 6 case studies, right? This is just a snapshot of STI, for example, right? Components, you rank, let's say, by dividend yield, right? But it doesn't mean the highest dividend yield is the best, okay? In fact, all these bank stocks, right, at later time, the dividend yield will go up because the like UOB, right? This DBS right now, right, already increased the dividend, right? Due to the MAS cap of 60% 2 years ago, right, being lifted. Okay, OCBC or Shun will get the 4.2%, but today OCBC just announced the result, right? So this database not yet updated latest, right, dividend here. Okay, but from here, right, we next time Dr. have a chance, right, you can learn the longer version of my this webinar. Today I only have roughly 1 hour to share with you, just as a short sharing, right? But if you need to learn the Dr. T complete 10 strategies, right, for free, right? So make sure you attend the later. I'll give you a bonus, right, near to the end, which you can actually learn the complete 10 strategies. Okay, so including dividend strategies, undervalue strategies, growth strategies, right, momentum trading, and so on. All right, that's focusing on our today topic. All right, Dr. Since the interest rate potentially can go up, right? So does it mean bank stock would benefit? Yes, because bank actually has a simple way to make money. We call it the net interest income. So what does it mean? Bank borrow money from you, let's say at 1%, and lend to other people at 3%. That difference of 3% minus 1% is called the net interest margin, or NIM. Even for the last 2 years, right, our 3 major banks has the lowest NIM, but they still make money because banks don't just make money from the interest income alone. They also got the non-interest income. For example, right? OCBC got the insurance sector, right? UOB, right, also got insurance. Then they also got fund management as well, right? They got also stock brokerage business as well. So that's why nowadays the non-interest income could be, quite significant. Yeah. So of course, it varies from one bank to another bank. Huh? At the same time, OCBC, right, partner with Great Eastern. Right? OCBC owns 88% of the Great Eastern. So that's why Great Eastern is the insurance, is a partner of OCBC. And in fact, both just announced the result this week. And UOB and UOI plus the DBS announcing the result last week. Right, UOI is the insurance arm of UOB, but UOB only owns around 50+% ownership. Okay, right. At the same time, both DBS and SGX, this one is under our so-called important this sponsor, our dear Temasek. Okay, Temasek has both DBS and also SGX. So that's why they're all interconnected in a certain way. So definitely when interest rate, right, potentially going up, let's say starting from next month, right, globally, right, although some central banks in certain country already cannot wait for USA, right, already going up. Okay, so Singapore for sure would actually follow the footstep of this US as well, right? But of course, the exact timing, right, may not at the same pace. But when interest rate is going up, the NIM or the net interest margin would go up, meaning the interest income likely will be higher. So that's why usually, right, as long as there's no black swan, for example, right, assuming the Russia and Ukraine, right, the war, even there's a war, right, it did not actually, assuming it does not escalate, to another higher level, let's say between Russia and USA. Oh, if the two superpower are fighting, okay, this cannot be, imagined anymore. That's why global market, especially in USA, in the last few weeks, there's a significant correction. Huh? Okay, but that will be under another, right, session, probably the longer session, which Dr. T can share further with you, beyond Singapore market to US, to Hong Kong, to Malaysia, right, to China, and so on. Huh? Okay, so that's focusing on these 6 stocks. If you know how to position for that, right? In fact, this Chinese saying, 因祸得福, what does it mean? Blessing in disguise. Meaning, by right, this interest rate go up, looks like it's a bad news for some people. By right, inflation higher is a so-called potential worry. But because of company can still make more money during this bull market. But of course, one day the bull run would end as well. Okay, so technically we are at the second stage of the bull run. Yeah, it's getting more excited, but at the same time, you also need to learn gradually, right, how to actually take profits, right? So that's why buy, hold, sell, wait, or shorting, not necessarily just a buy, right? Including your stocks, how long to hold, right? Until when to get out. But all this you need to align to your personalities. Long term, lifetime, short term, or even medium term. These are 4 unique personalities. Okay, let's proceed further. But before we continue further, right? If you have further comment, right, you can actually type in this comment section, right? Yeah, because it's very important, huh? So in fact, we have one comment asked by one of the audience, right? This Nicholas asking, what do you think of the OCBC latest earnings report? Not to worry, I'll cover that. Right, if not, later on can remind me, huh? Yeah. So today OCBC, right, announcing the earnings result, and yesterday was a Great Eastern. Okay, good question. If any other audience have further question, all right, you can ask as well, huh? Yeah, because it's a live session. Good thing is, you can actually, probably ask the latest, to the current week. Okay, so we continue from here, right? So Dr. Right, so these are the 6 stocks and why they are significant. Okay, right. Number 1, they actually can be categorized as a giant. Huh? Of course, exactly how to actually define a giant in future you can learn further from Dr. T. Right now, just accept it is, they are giants. Okay, the three major banks, no need to mention, you get to know them. And the two insurance stocks, okay, they are partner of the giants. So naturally they are giant, although may not be the case sometimes. Huh? And then of course, SGX, right? This is the host of your 700 to 800 stocks in the Singapore, right? So that's why a company which is so powerful, right? It's a monopoly stock some more. Okay, so we combine the six together, right? At the same time also Dr. T, right? I think just nice all the six have announced their financial report for Q4 last year. And at the same time, right, they actually share this probably the Q4 as well. Huh? So Dr. T has gone through all the six financial reports, right, from memory. I can roughly share with you. So in general, probably through here, just a summary here. DBS, OCBC, UOB, right, all doing well, right? So in general, if you compare year over year, right, 2021, right, easily over 40%, right, compare year 2020. But at the same time, the growth rate, let's say, based on the second half of last year, 2021 versus the second half of 2020, then some of the company, right, would actually become slower. Huh? Yeah, for example, right now, if you see UI, is technically just flat. In fact, Great Eastern's right going down slightly. The reason is that the second half of 2020, right, they are doing too good. Same thing for OCBC. So that's why when you compare the sudden surge in the second half of 2020 compared with the second half of 2021, so give you an impression that they are not really growing much. Okay, but that actually I call it a statistical illusion. Yeah, so that's why when analyzing stocks or even the earnings report, I could not just based on the quarterly or half yearly, because sometimes there's a seasonality effect. Not to mention there's a COVID, right, depression in the first half of 2020, plus a sudden surge, okay, in the second half of 2020. So that's why either one, they are not the may not be the good base for comparison. Huh? However, right, the stock market, right, not everyone would think the same way. Right? That's why today, right, you will read the OCBC report. Although they try to present as like a year-over-year kind of comparison, which going up by 35%. And then whoever are more careful investor will read further. In fact, compare half year over half year, right, year over year. Right? In fact, it has been technically declining a bit. Huh? Yeah, so this is the reason why OCBC today, the share price dropped roughly 4%, while DBS and UOB still growing up a little bit. Okay, anyway, so that's why we say that the stock market in the short term is like a voting machine, but in the long term is a weighing machine. So I have to actually see through, right, slightly longer term than that. SGX is the same thing, but SGX is a little bit unique, right? Although the earnings, right, as similar to like Great Eastern and OCBC, right, because of comparing with a base in the second half of 2020, which is higher. So that's why last year, second half is actually getting weaker. But that getting weaker is still better than the analyst expectation. So that's why sometimes the financial analysts could actually help to confuse the market. When they predict like go up 10%, if never go up 10%, even is profitable, a stock may not do well. For example, a little bit sidetrack, like Facebook could be a good example. Yeah, because most people would take it for granted for Facebook to grow quarter after quarter. But suddenly, if one day grow very marginally, then it will fall down tremendously. Same thing like Netflix and so on. Okay, but for SGX, this is another strategy. Later I'll show to you how to position. Okay, in short, they have something in common, right? 6 of them all giant stocks, and 6 of them, right, all profitable, but they're profitable in the different ways, right? Different trend and so on. So therefore, there are short-term, medium, and long-term prices, right? Will give you, right, different kind of signal as well. Let's go through one by one. All right, so this is our dear DBS, the largest company, right, or largest stocks listed in Singapore, right? So you can see that you can apply Dr. T optimism. In the last 20 years or so, the low or high to look for opportunity to buy low, sell high. Okay, although pandemic did not drop to the lowest optimism here, but this is already below Dr. T, the intrinsic value. And then in the subprime crisis, there was a good buy. At that time, could be around $8. Right? Remember the old time? But do you think it can drop to $8 again if you apply that strategy? Right? If you wait for 100 years, I'm not too sure whether you can buy back $8. So that's why the future new low may be different. So you can actually apply Dr. T optimism for better estimation. In fact, you don't need to buy even at the unfair price. Even you below the fair price already good enough, like here, here, or here. So it means in the last 20 years, right, at least there are 10 years you can invest, right? Whenever, right, you see the opportunity, DBS below 50% optimism, which is the yellow line here, right? So I still remember during one of the public webinar, Dorothy talked about DBS, right, around September time in 2020, right? That's roughly 6 months after the pandemic. So that time was still around like $20, right? So if you could take action at $20, at the time, I still remember the dividend yield is probably around like 6+%, right? If you can do so, today you can enjoy 6+%. But since then, the share price has gone up by 80%. So dividend yield, right, as a result, also dropped to around 3.3. Yeah, so now you understand why it's important to buy low, right? Either you sell high or you don't sell high, it doesn't matter. You can actually hold for long term, right? And in the last 10 to 20 years, DBS has gone up 4 times the share prices from $8, right, go up to $37, the highest. Okay, Dr. T, so optimism is 78%, touching your red line here. So like just I mentioned, right, even we could not buy low, but does it mean right now I have to sell it, right? If you sell it, some may regret later on. Why I say that? Because high could become higher. Okay, it doesn't mean it touched the high optimism, right? You would actually end exactly there. Not to mention, right now we still have a potential momentum for a few more years. Although that is very dependent on the potential black swan, right? Which who knows? One of them could be Russia plus who knows ABC so-called country. You never know, right? The potential war. Right? Even it's not a war, the reason all this market worriness, right, that may actually create, some correction, right? But at the moment, for at least the Asia stock market, we are not seeing that the signal to get out yet. But it's wise for you, right, to monitor. Okay, later on, I actually will extend from long term to short term. Right now, I'm covering long term first using optimism, although optimism also can show short term. Later, I will apply like technical analysis to show you the near term, right, trend for whoever doing short term trading. Right. So even you miss the, like the $20, right, during pandemic, you miss a 6% dividend yield. Right now, still got 3%. If you put money with a Singapore savings bond, you just get 0.3%. Why you cannot put money, right, with a fixed deposit using DBS Bank? If you give money or deposit cash in DBS, right, DBS only give you 0.3% interest rate as well. But right now, if you buy DBS Bank could reward you 10 times of that interest rate, which is 3.3. But Dr. T, what if 1 week it dropped by 3%? My dividend, right, gains will be erased. Exactly, because people worry the up and down, and sometimes it could be 10%, it could be even 50% or even more during this kind of especially like this one, global financial crisis, 2008-2009, the subprime crisis. Okay, of course you regret of missing this opportunity, right, to buy lower than 50% optimism here. Right, but starting from today, right, you need to actually learn further, right? Today, because a short sharing here, right, do prepare to learn from Dr. T, the extended version, right, the 4 hours version, the 10 strategies. The coming one, right, will be on this Saturday, right? Even if you miss this Saturday, the next one will be, next month later. So later on, near to the end of this live session, right? I'll give you the link, right, to go to Dr. T website, ein55.com, right, to register for that strategies, right, which are more details. Okay, so say goodbye to DBS. Although I must say that I don't discuss this giant yet, right? You probably cannot do cyclical investing, right? You probably cannot do growth investing, but it may consider momentum short-term trading. So that's why a giant got multiple rules. Okay, it can allow you buy low, sell high. It can allow you buy low and hold. It can allow you to buy high, sell higher. Many ways. It can allow you to hold dividend and collect dividend. Although right now may not be a good time to collect just 3% dividend, right? Okay, let's proceed to the next stock called the OCBC, which is the number 2, right, in terms of market cap. And OCBC today suffer. Why? It dropped by 4%. Yeah, partly because of the this second half of 2021, right? It's not doing so well compared with 2020. But to be fair to OCBC, some people thought something wrong with OCBC. Not quite. In fact, OCBC, UOB, DBS, to be frank, either of them you can buy any bank stock. Their performance, right, I would say is within like plus minus 10%, either in terms of earnings or the share prices. However, right, because of the uneven, right, either quarterly or half-yearly performance, nowadays SGX only requests reporting of financial report every 6 months. And what happened this way? Let me explain the rationale behind why OCBC, all right, so-called not doing so well this time. Because in year 2020, after the first half of pandemic, it fall down very badly. But in the second half, OCBC doing well. But not only well, it become very well. You know why? Because of the dear, right, subsidiary, which they own 88%, which is called the Great Eastern. Great Eastern doing very well in the second half of 2020. Because of that very well, and the Great Eastern alone, right, contribute to 30%, right, of the earnings of the OCBC. Although market cap is only 20% of OCBC. As a result, we have a high so-called this denominator or the base for comparison. So this is the reason I call it statistical illusion. Right. So if you read too fast, right, Dr. T, OCBC not do well. Second half 2021 is lower than the second half 2020. You're right, perfectly right. What OCBC and Great Eastern did not do correctly is they did not spread out the earnings. Okay, let it concentrate on the second half of 2020 more. And there are, many some investor, right, who read too quickly, right? They thought something bad happening already. Not quite, not quite. Although I must say DBS in the last few months and UOB, right, the share prices indeed do better than OCBC. At the same time, more positive corporate news. For example, they take over the Citibank business. DBS take over the Taiwan Citibank business, and then for Malaysia, Indonesia, probably Vietnam, and so on, that is actually take over by UOB. But OCBC seems like no action at all. How do you know no action? And do you know this news? This CEO Helen Wong, formerly from HSBC, the Great China side. So do you think there might be potential? Last time, the former CEO of OCBC, right, this Samuel Chen, right, initiated this acquisition of Wing Hang, okay, these banks in this Hong Kong, right, to go into the Great China. Do you think OCBC may want to save the cash for this purpose? You may never know. Or do you think OCBC want to probably take over this which one is it? The Great Eastern. Why? Because in the year 2006, if my memory is correct, yes, in 2004 and 2006, OCBC offered 2 times before, right, to acquire this Great Eastern, but did not successful, right? In fact, in year 2006, the acquisition price was $16. Right. Of course, as to today, right, this Great Eastern has come to a higher price. Later we can take a look. So that's why OCBC right now remains lagging. So that's why you can see here DBS high optimism, but the OCBC is still at the mid optimism here. So implying that if you are doing investing, OCBC, you want to consider for growth investing still possible, or value investing because it's still at the near to fair price. There's more upside potential, okay, over here, although it's lagging. Lagging become a strength. Although if you are doing short-term trading, DBS or UOB could be a better choice, right? Because momentum is stronger. Hope it's clear for you, lah. Okay. In fact, Dr. T1 students, right? In fact, position in OCBC, right? In the May 2020, when I assigned the homework to them, at that time was around 8.73. Okay. Yeah. Of course, the rest is the history after 21 months later, right? Although 50% gains here, not as much as 80% here, but eventually it's all, do you able to take action? Whether take action at $20 for DBS or take action at 8.73, it doesn't matter. Or even higher, doesn't matter. A lot of people is like this. When cannot buy very low, when the price getting higher, then they regret. Say, no, I don't want to buy anymore. When the bit higher is gone, right, become fair price, then they also don't want to buy. Then when it come to the high here, then they're asking, Dr. T, can still buy or not? Right, so that's why it's very strange, right? Because if you can position investing in stocks as if like a shopper, right? Buy low, sell high, buy during Great Singapore Sales, right? But the Great Singapore Sales, why you actually feel confident is very rare. For a handbag, $100 drop to $50, $50 can drop to $0, but a stock could drop to $0, right? Especially for a junk stock. So that's why Dr. T, right? Our number one criteria, we need to look for a giant. Huh? Once you got a giant, wait for the giant to fall down and then giant recover, right? So there are many strategies, at least there are 10 strategies. Today, probably focusing more of the either the buy low, sell high or the buy high, sell higher later on through trading. Huh? Okay, so we continue here. Oh, OCBC, by the way, has the highest dividend yield. This is the latest dividend yield. Including today, they're announcing, I think, 28 plus 25 cents, altogether 53 cents, right? Dividend yield for entire 2021. Take that divided by the current share price, 12.56. That's equal to 4.2%, higher than the DBS and higher than this UOB, 3.7. UOB usually is stuck between, right? Share price also stuck between, optimism also in between 73%. Not very high, but marginally high. Okay, all right. In fact, the short term for UOB has been quite strong. Later I'll show to you the short term, this chart of the UOB and the rest of 6 stocks as well. All right, same thing, the share price can grow by 4 times. Pandemic, you can buy low as well, but right now some worry, should you sell high? Okay, for investor, I am not stopping you if you want to stop, want to sell DBS or UOB, because indeed it has come to the high, but you may regret. What if we go up another 10 to 20%? Remember, we still got the second stage or the second half of the rally with pandemic recovery. It may not be game over, although any day, any crisis could be a potential black swan from now. A black swan, why it's called black swan? Exactly the same as like this pandemic in 2020. No one would expect, right? It may become a disaster. Although initially there might be some clue. Huh? Yeah, for example, what if the Russia and the Ukraine war, right? From a small scale to, who knows, touch wood, it becomes uncontrollable. We hope it never happen, right? But from investing point of view, right? A black swan, even the chances is less than 1%, right? It's still a chances. So that's why all these are called a probability game, right? So probability in the long term, right, give you more assurance, because these are the short-term volatility. This is called the voting machine, but this is a long-term, we call it a weighing machine, up 4 times, 3 times, 4 times, right, and so on. Okay, so UOB and DBS positioning are quite similar, either short-term momentum trading, right, or you can actually take action if the next few days, right, if the signal coming down, right. Right now the signal is probably not yet. Later on we come to the TA side. But for this OCBC, right, the near term, the trend is probably not as good as the other two banks. Okay, partly because of today, right, significant sell down. But this is a quick reaction to disappointment of some investor to that Dr. T's so-called statistical illusion, although they don't think it's illusion. They think that year 2020 second half you make extremely good performance, you should do it, and now you're not able to catch up that very good performance, so that's why now you need to suffer. Of course, you see, it's so difficult to please some investor. Now we continue. We look at UOI. This is an insurance arm for this UOB. Usually for every this giant bank, behind there's a giant insurance. UOB with UOI, okay, public bank, right, with LPI, and then we got this OCBC with the Great Eastern. The difference is UOI, when they contribute to roughly 1% of the market cap of UOB, relatively very, very small. So that's why even UOI make a lot of money, to UOB not much. But for Great Eastern, oh, you make a lot of money. For example, right, in the second half of 2020, that translates to very good performance of OCBC. Although looks like helping OCBC 2 years ago, but right now hurting OCBC because of the relative comparison. So it's like you are A student, right? Then you become A plus. When then I think you're good. If you're A plus, then you have to how to become A plus plus. Right? Understand? So for A plus student, right, the only way you can move forward is very simple. You become a B student first, right? It means that you need to under correction and so on, huh? All right. So although it may not be a good analogy, but it's easier for you to understand the relative thinking of some investor, right? So indeed, some investor, right, although they are longer term investing, their mindset is a bit shorter term, huh? Okay, but that would affect the short term share prices, right? Which I agree, huh? But for UOI is a bit different, right? This stock, to be frank, has hit a very high optimism 2 years ago during pandemic pandemic crisis. It did not hit a very low, but yes, like kind of like a stagnant, right? Going like sideways. So this kind of stock, although it's like near to a fair price, but this is like I would call it like a downtrend. So you see, similar kind of fair price in this OCBC. This is uptrend, right, at the fair price versus downtrend at the fair price. All right, it could have different meaning. All right, the reason is if you integrate trading and investing, UOI may not be a good choice due to that consideration. And then the 2.5% dividend yield is also not so attractive. So I'll say among the 6 stocks, UOI probably the least of the opportunity for investing or even for trading, right, due to this consideration. But one day, if UOI can be very cyclical down again or very cyclical up again, you see, this is also the beauty of UOI. But you need to apply Dr. T optimism to look for that great opportunity. Can you wait for another 5 years? Dr. T, I wish, right? Or hopefully one day you can conduct a webinar after 5 years later. Even I could do that, are you sure you can take action? That's why action taking is the most important. A lot of people thought, just follow an expert, press a button, right? Not quite. Each of us, we are unique, right? Dr. T has over 4,000 graduates. At the same time, so far, at least probably at least 40, 50,000 public audience has heard my talk before in the last 10 years. From Singapore, also extending to the whole world, right? Even right now, you're not from Singapore, assuming you're from Malaysia, from other country. Who says you cannot buy Singapore stock, right? Who say you cannot extend, for example, the financial stock Dr. T mentioned in Singapore, extend into Malaysia to Hong Kong. Right? They're also having good stocks. They belong to a similar sector, financial sector. They also can benefit from the growing interest rate globally. So for that, you probably need to wait for Dr. T, the next extended version, the 4 hours webinar, right, which you can sign up at Dr. T website, ein55.com. Later I'll give you the exact link near to the end. Okay, say goodbye to UI. Right? Not because it's a lousy stock, it's good, but when we do a relative comparison, right, the rest, is a better choice. Yeah, even UI versus the OCBC. Right, seems like OCBC similar is like a laggard stock, but the potential is actually more than UI. Now we continue to Great Eastern. In fact, Great Eastern is very impressive. Right, if you do a relative comparison with parent company OCBC, it's a lower optimism, 32%, although not at the so-called unfair price as during pandemic. Right, if you can buy here, that'll be good. Here, who knows, right? Could be, $10+ if you can get it, Yeah, but here, right, this Great Eastern is around 32% optimism. It's not low, right? It's also not the so-called fair price. It's in the middle. In fact, this trend is quite good, but it's under correction in the last 6 months or so. It hit the intermediate high and then falling down in the last 6 months. Right. So this round, in fact, Great Eastern, the result announcing on the Monday. Right. In fact, a correction not as much as the OCBC today. Right. Fall down by 4%. Great Eastern relatively actually, investors are more forgiving of Great Eastern. But actually, to be frank, what the OCBC today suffering is behind is due to the Great Eastern. Right? Not because the Great Eastern is lousy, because Great Eastern has been too good until now suffering. Why? Too good until the A become A+. A+ right now cannot become A++ student. There's no such thing as A. Okay lah, you can become A++, but very, very difficult. Okay, because right from pandemic recovery, you already get an unfair advantage, accumulating probably 1 or 2 quarters of the result, and then reflected in the second half of 2020. So that's why in year 2021 is more evenly distributed. So technically, if you read closely about the result of Great Eastern, in fact, the insurance business is still growing. Right? Not really as you read at it is, say earnings actually drop, right? That is called earnings. Remember, if you understand about accounting, earnings may not reflected 100% all the components. Okay, there are other components. So that's why in general, it's a mixed trend. There are some are going up, some are coming down. Okay, but investor don't care. They read, especially they say they read the Business Times. Using a title, Great Eastern fall down. Great Eastern's earnings drop. OCBC earnings drop. Quickly, Dr. T. I think they are going to go bankrupt already. I think better sell. Okay, I'm not stopping you, right? Those especially for trading, but trading you want to sell also a bit too late lah. Right? What if your stop loss is like 5%? Like today, OCBC already dropped like 4%. Luckily, Great Eastern still relatively okay. Later on, we come to the trading side using technical analysis. I'll explain further on that. Okay, so although you can collect 3% dividend yield here, but the OCBC actually give you more. Right? To be frank, Great Eastern can give you more dividend, right? Because there's more position as a growth stock. So that's why Great Eastern created a special opportunity. Number one, for trading, probably not yet, right? But for investing, right? It create probably among the 6 from investing perspective, right? This is more, right? Followed probably by OCBC, right? Of course, if you ask me here, pandemic, definitely all these are the best, but you already missed the best of the decade, right? Then we have to come to probably like medium term, right? Probably look for the best of the year, understand? Or then for trading, then we look for the best of the month. Yeah, so that's why whether you trade the best week of the month or invest the best month of the year, or the super golden opportunity, the best year of the decade, right? Or some doing investing, you're looking for the best, right? Just one time, buy stock as if like buy property. You can hit one, you can hold for lifetime long term. Not need to sell like your property, but you need to carefully, right, diversify to 10 to 20 giant stocks, right? For example, you got $10,000, 1,000, 1,000. Yeah. Do you think 10 of stock? Do you think DBS, OCBC, UOB, UOI, Great Eastern, and assuming, right, SGX, 6 of them, do you think they may be in trouble one day? Right? Assuming one of them in trouble, let's say you gather 1,000 times 10 stock, assuming one stock go bankrupt, you still got 9 stock, and 9 stock, you see, I'm not saying 50%. This is like 20 years up 4 times, 3 times, and so on. Not to mention, all right, this Great Eastern got up 6 times. This is one of the strongest growth stock. Right? Among all, Great Eastern is a stronger growth stock, and right now relatively low, although not the lowest. Right? You need training to get here, but here, probably a little bit of stock tips you can do it. But even you buy here, the voting machine may drive it down. So that's why later on we still need to actually extend to trading side, right? Especially for those who want to integrate trading to investing. All right, so we continue. All right, say goodbye to this giant, and who knows, next time you may have a special gift. What's a special gift? What if one day OCBC say, "Ayah, I want to buy some China bank stocks. How come cannot buy?" But still got a lot of money, right? Do you know how much money they need to actually acquire Great Eastern? Right? If my calculation is correct, because right now they have an 88% ownership of Great Eastern. All right. So based on the market cap of Great Eastern, the remaining 12%. Right, then you add extra 20% premium, because usually you want to take over, you need to pay roughly 20%. All right, if my calculation I still remember correctly, right, you need around 1.4 billions. 1.4 billion actually is not a lot of money for OCBC. Right, to use 1.4 billion can actually totally take over. Right, especially right now, Great Eastern relatively low. That's the time in year 2006. In 2006, that time, I think probably around June time, right? OCBC for a second time want to acquire Great Eastern at $16. Did not get through. Later on, $16, it fell down all the way to very low optimism and then recover again. Okay, the rest is history. So it has been 16 years since then. I think if OCBC want to acquire already, in fact, if they are trained by Dr. T, they should have during what's time here, offer to shareholder to buy back at here. In fact, in Singapore, quite a few stocks are delisted at the low optimism as well. Right. For example, last time we got the this what's the name? I think it's a Wheelock, is it? Wheelock, and then quite a few others, right? So of course, sometimes it's quite sad news. That's why even you buy a giant stock, you could still lose money. How? Either you buy at the high optimism or you buy at the fair price. And one day, if you drop to low optimism, you thought you can hold until recover, but halfway, right, the major shareholder, right, may actually say goodbye to you, right? Say they want to totally take over. Can you say no? Unfortunately, may not be. Huh? Right. Of course, in the last 2 rounds, in year 2004 and 2006, right, the Great Eastern shareholders say no. Right, but right now we will need 2% difference. According to Singapore law, right, HGX the rules, 88% you just need to acquire 2 more percent, or more precisely is 2.2%, because OCBC has 87.8% of Great Eastern. Okay, but don't decamp so much. You thought buy a stock and wait for the 20%. Okay, yeah. What if you need to wait for 10 years? Or rather, you buy and position for the growth. That is probably more practical. But the worst case, right? Assuming it did not actually go up, let's say it goes sideways or whichever, right? You treat this as like a fixed deposit, collecting 3% interest rate. You pretend you put your money in a Great Eastern so-called endowment fund. Great Eastern got insurance fund, right? Now pretend your $1,000 you buy endowment fund, assuming the endowment fund cannot take out until 5 to 10 years later, unless they redeem back. They say redeem, kind of like implying like either the market come to a high or the market actually give you a surprise takeover by OCBC. But how many of you can do that? Especially what if the capital loss? Let's say what if the market fall down by 10%? You thought not possible, down by 10%, then your 3% cannot compensate for the 10% capital loss. Exactly, too many people, too calculative. Every day, pay attention. Watch the market every day, until you're so stressful, until you cannot cope with it. Yeah, make money also feel stressful. Lose money also feel stressful. Why? Because make money, then you worry, right? You cannot make more money, or you sell it. For example, you sell it here, it may go up further. I also feel stressful. Why? Because too many people want to have a crystal ball to see the future, right? There's no such thing as crystal ball, to be frank, but optimism is a smart method. Although it's a one of Dr. T 55 star, it tells you the relative probability ahead. Although at here, for example, when you're at 35% optimism, all right, it may not go up immediately. It may fall down, for example, here, assuming this is like 10% optimism before it go up again. But from here to here, it may already suffer capital loss. But could you do an average down? 1,000, 1,000, 1,000. Yes, you could do it, especially protected by dividend. But the average down may not be suitable for weak emotional, right, investor. Yeah, because you every day worry, every day calculating how much you lose. Yeah, it's not healthy for you. Or rather, right, you do average up. For example, from here to here, you can buy 1,000, 1,000, 1,000, 1,000, 1,000, 1,000. Anything less than the yellow line, you can average out, right, in the up so-called trend manner. Okay. So anyway, for whoever the audience you are listening, right, you can actually continue to type the question. So just now, for example, already answered to this Nicholas already, right? How to achieve position, huh? Right. Also the earnings of the OCBC, right? Feel free to type, right? More question if you have. Okay, now let me continue before we come to the trading side, right? So let's proceed further from here. Say goodbye to this giant. Look at the last one. This is a giant of the giant, or the mother of the giant. Why? Without SGX, there's no stock exchange, there's no stock market anymore in Singapore. So that's why usually exchange in general is also a giant. For example, Malaysia, we got Bursa. Right. Then in the USA, we got the ICE. Okay. For this New York Stock Exchange, ICE. Then we got the Nasdaq, right? The company for the Nasdaq exchange. Then the Hong Kong, we also got the Hong Kong exchange. SGS is quite unique. Why? Because it has been like a share price, right, stagnant for many years, right? If you look for long-term perspective, but it's almost perfect as like a long-term fixed deposit. For example, you can put money as if like a fixed deposit for 3 to 4 years. I know for 3 to 4% return here, right? But of course, to collect 3 to 4% return, although at the 27% optimism, looks like so far this is the lowest optimism among all, even lower than the Great Eastern. But even that, you see, Great Eastern, there's more cyclical pattern. But SGX, we don't see much cyclical pattern in the long term. So that's why I'll say SGX opportunity may not with the long term here, although you need to wait for longer term, right? Because collecting 3 to 4%, some of you probably think that is too low expectation. Instead, we extend from long term to medium term. Okay, this is the only one I add the medium term. Right. So now medium term meaning, right, we're looking at the shorter term time frame, right? Probably every few months or few years, there's opportunity. So look at here. You see, roughly every 1 year or so, there's a good opportunity to buy low, sell high. And each of them, upside or downside, could be around 20%. All right. And this is actually, without the leveraging. Right. So some of you even want to, for example, for trading, right? Some of you want to add in like CFD, right? Contract for difference. Then it's possible. Then you may actually extend further. And the good news is over here. Should I say good news or bad news? All depends on you. Right. 1 year ago, right? Because of the future contract, some business, right? Some business of the future market actually, MSCI futures, has been moved to this Hong Kong exchange. Okay, although later on SGS also tried to bring in Baltic Dry Index, also this more forex market indices to strengthen it. But the market actually punished SGX for that so-called losing of the important business, right? Through probably the share price fall down from roughly $12 to roughly like $9 plus. Okay, yeah. Although it has been low correction, dropped by nearly like maybe 25%. But guess what? Now it come to an intermediate midterm low, And this signal is quite good because there's an uptrend here, although it's not long term, right? But this 14% optimism is quite good, huh? Yeah. So if you time well, especially you can integrate trading here, this could be another good opportunity among the 6. Okay. So among the 6, probably HGX is one of the best for the medium term opportunity. Then the UOB or the DBS are more for the short term. Okay. While the SGX and the OCBC more for long term, and the UOI probably currently the lower of the priority, right? For all this possible positioning. Okay. Although it could give you a surprise because UOI sometimes could be quite volatile. Huh? Okay. Now we look at here, and then later on, Dr. T will actually give you how to sign up for. Probably here a quick showing you first, because some of you cannot wait. 10 strategies, more extended version, right? How to buy low, sell high, buy high, sell higher, right? More outlook of the current market, right? From US to Hong Kong to China, right? Malaysia, and then on top of the latest Singapore market outlook, right? 10 times of what you learned today, okay? Yeah, so including dividend investing, growth investing, all the 10 strategies, you can sign up here. How? Register at ein55.com. You can actually register together with these friends. My next coming one on the 26th of February, which is coming Saturday. Right, you need to register, then you get a Zoom link. Huh? It's a webinar version, right? At the same time, if you miss this, you wait until after 26, then the same website will be updated with the next monthly webinar, which is March. Okay, so every month I have one session. But if you don't want to miss the current situation, especially you worry about the Russia-Ukraine war, how it may affect both Singapore and the regional market and so on, right? So do not miss it. Huh? Right, try to join earlier at the 1 p.m. For the bonus stock diagnosis, meaning before starting, you can name one stock of your choice, then we actually can analyzing together. Okay, so now Dr. T would like to actually go to this maybe the TA here. In fact, I'm also doing this Facebook Live over here. Okay, so at the same time, let's look at the DBS for today. So this is a DBS, right, based on the current today price. Of course, after a few days later, right, this price will be outdated. But let's look at the current one. Okay, this is a short term, right? So what are indicators Dr. T use? Like 10, 20, and 50 days moving averages. Red line is 10 days. You take the last 10 days of a candlestick. Every day is a 1 day candlestick and then become average. And the green line is 20 days, followed by black line 50 days. So why this DBS good for trading? Right, number one, right, the 50 days is trending up quite well, supporting. Right, currently, although it's almost touching, in fact, 2 days ago touching the 20 days. Right now, recurring well today. When this DBS is falling down, but the DBS and UOB actually are recovering. So that's why among all, let's say for momentum trading, right, I would say DBS is a good candidate. Huh? Yeah, every time when the price fall down below the green line, you cancel vacation. When the price cross above the green line, you E for entry. Okay, but you need to put the SCT. So Dr. T, what's the meaning of SCT? Right, it means that, for example, like here, E for entry when the candlestick cross the green line upward. And then the last low here, you can put the S for stop loss. And then when it cross down again, for example, at here, right, it can actually T for take profit. Although it say, Dr. T, is it now I can do a so-called second E for entry too? You could if you want to, but you must always, right, put a low here, or even you can add like a X%, like 5% or 10%, right, a stop loss, okay, as a stop loss number 2. Same thing, for earlier trend, right, if you want to write the trend, right. This is a very simple trend following system, but require you, right, to actually manage your trading plan, SCT. And this is a very short-term sample plan for that. Okay, let's proceed further. Assuming you're not short-term, can you extend a little bit to the maybe like to medium term? Is it possible? Yes, so look at here, medium term. Medium term, we are looking at weekly chart. Okay, for example, this weekly chart, 4, 10, and 40 weeks. Okay, 40 weeks, black line meaning 200 days. 10 weeks, the green line meaning 1 week of 5 trading days. So 10 weeks meaning 50 days. Okay, and then this red line is 4 weeks times 5 days, meaning is 20 days. Okay, so for the medium term, the strategy a little bit, we're using moving average crossover between the red line and the green weekly line, meaning we use the 20 days cross the 50 days, or we using the 4 weeks cross the 10 weeks. How to do that? Okay, let me draw over here. That'll be easier. Number one, make sure your 200 days, okay, or this 40 weeks are trending up. And then all these are the entry point here. Where the red line cross the green, right? These are potential. For example, here, potential entry, right? But as of now, the red line has not yet crossed the green line yet. So means if you enter like probably 2 months ago over here, you can still wait. Okay. All right. If let's say the next 1 week, all right, the two lines may cross each other, then you can get out. Huh? Yeah. So there's no so-called guessing game. You follow rules, and this is a very simple rule, but can be powerful if you follow through. Huh? There are many ways. There are 1,000 different TA. Right, Dr. T just teach you one simple way, but that could already help you. Huh? Okay, let's proceed to the next one called OCBC. Today, right, it's like a jump water here. Right? From cliff jump, go down 4%, but you see, there's a reversal here. Right? Although it jumped down, but it crossing high. There's a little bit of good news, but not yet, right, to justify to go in yet. If you want to go in, at least let it come back to above 20 days moving average. Huh? So this one, if you use microscope, right, to take a look, right, it may be around like $13. Huh? This 12.9. Okay. All right. So wait until it's go up above 13, right, before you enter. And again, you need an E for entry. Maybe put the last low here as a stop loss. But of course, if you continue to fall down more, then you may not take action at all. Huh? Okay. So OCBC, this is more on the short term here. Okay. Yeah, because short term is very sometimes I would say very hard to predict. Huh? Yeah. So look at the next one, maybe more for the medium term. Let's look at the medium term. What are the opportunity from the weekly chart point of view? So based on weekly chart, this is the 200 days, right? It's still trending up, but getting a bit weak. Right? The red line still crossed the green line, as Dr. T mentioned just now. So if you enter here, for example, the last entry, when the red line cross the green, right, you can put the last low here as a stop loss. So right now, although this candlestick fall down 4%, but the red line not yet crossing. So your current action is still a holding, right, at the moment. Is that okay? Yeah, but to be frank, this OCBC, right, if you want to position for the short term, indeed it's relatively weaker than the DBS or this UOB. Right, you need more probably this support from those fund manager, especially right now the dividend yield can come to around 4.2% versus UOB, which is a 3.7% dividend yield versus around 3.3% dividend yield by DBS. Right, but usually traders don't care much about this dividend, huh? All right, so we continue from here, looking at the next stock, which is UOB. UOB is still all right, so your positioning quite similar to this DBS, right? Except DBS has fallen down to the 20 days and recovering. This UOB, because it has been too bullish, the correction is very little. So if you have been entering, for example, since last time over here, let's say below the green line, then you cross upward or use a breakout to go in, doesn't matter. So as of today, you can still hold, but if you touching the green line, then you still need to get out, take a profit and goes. Huh? Yeah, but Dr. T, in that case, but what if the market can go up, right? But it never fall down to 20 days, assuming go up how? Then you can apply a breakout strategy, right? You put like a line here. You see the high is around 30, near to 33. So it means you only go in when UOB is higher than 33. This means buy high, sell higher. When that happening, likely is because of STI, who knows, may break 3004 to 3005, right? So today, if you understand, STI is roughly slightly below 3004, right? It has been breaking above 3003 resistance, but the last resistance is around 3005 plus. Okay, so that's why for both DBS and the UOB, right? Currently, right, momentum trading require a new breakout. Although DBS, there's some correction, you can still going in, right? Even at the current price, right? Assuming the next day has to be bullish. If the next day is a bearish signal, then usually we are not going, right, during bearish signal. For example, if the candlestick fall down, we're not going in from trader perspective. But for investor, Dr. T, I thought buy low, sell high, ma? Yeah, but we also don't purposely catch a falling line. Buy low may get lower. Remember that, huh? Okay, so we look at the medium term perspective. Medium term is still quite healthy. Right, can see here the 200 days or 40 weeks is trending up. Right, at the same time the green line, right, and the red line crossover, right. Once it started, right, not yet closing. So it means right now still an open position to hold, especially if you already entered, right, somewhere here. All these are the past, right? When it's congested, then this method not so good. Huh? When congested, make sure there's a breakout. Okay, yeah. So moving average crossover, usually you need to make sure the trend is up, right? Not for the so-called this kind of sideways trend. Right, we continue looking at for the next one, which is the UOI. Right, UOI is an insurance partner. Can see this kind of trend very hard to so-called manage. In fact, this candlestick shoot up 1 week ago, partly I think because of the UOB and UOI. The result is the if investor interpret that as a good result, although I must say that it's just a moderate for UOI. Huh? Right. So in fact, UOI is just okay only. Probably one thing they did correctly is the second half of 2020 did not perform as excellent as a Great Eastern as an A-star student. So that time is probably a B-star student. Right now, of course, can become A lah. B-star to A is easier, ma? Okay. But this kind of signal, I will say, unless you're using breakout, otherwise, more difficult to control it. Huh? So I'll say probably for this stock, due to the less predictable trend, right? Probably we can skip it for trading. For medium term, you probably still can consider. But the one thing I don't like here is the 200 days, kind of like a trending down. So even you don't feel that it may fall down, but that kind of trend I feel not comfortable, because for trading usually, right, we need a stronger like uptrend. We see a higher high or higher low, right? So that's why this kind of trend, even you can prove I'm wrong, it could go another higher, whichever. But from trading or investing perspective, currently at a fair price, I understand that, but the signal may not be suitable for most of you, huh? Okay, since there could be other better opportunity among the 6 stocks, so we probably can put the UI as a lower priority. Okay, let's move on to the next one, right? Which is the how come I just stop the sharing here? All right, let me share one more time. Okay, yeah, so back to here again, huh? Okay, so come to here. All right, so Dr. T, may I know how to position for the next stock? Okay, come to here. Okay, which is important. This is the Great Eastern for the short term. Why, Dr. T, just now implying Great Eastern probably a better opportunity. Number one, for shorter term, 50 days trading up. And right now the price is touching 20 days. But when touching 20 days, doesn't mean you can go in, not the so-called buy low sell high. You still need to wait for tomorrow. If tomorrow is a bullish, probably you may consider. Bullish meaning must be higher than this candlestick, and it has to be a green bar, right? But if tomorrow fall down further, right, please wait for the correction to be over. So in general, we let the price drop below the 20 days and wait until it cross the 20 days again, right? When it then go in again, it's okay. Yeah, but if you want even stronger, right, you may even let so-called this Great Eastern to break $22. $22, right? This is near to the last resistance here, right? But some of you will feel, oh, 21 I don't buy, but then I buy 22, then I waste $1. Right? So it's a different perspective. Whether you're investor or trader, right? That is a different view for that. Huh? Although you're sacrificing $1 here, but you're exchanging for more confirmation. It's like an insurance you pay for the confirmation of a more consistent, right, recovery of the trading trend, right? But if you need slightly longer term, right, let's move on to the medium term over here. Let's look at medium term. Medium term currently still a little bit similar to EOI case. The 200 days are trending down here. So that's why you still need a little bit more energy, right? Right. Despite if you're using red line cross the green line, yes, there's a crossover. You're right. It's not wrong to say, to follow this signal. If you want, it's fine. But right now, the red line not yet crossed down the green line. So you've been, let's say, entering over here, then you can hold. Huh? Yeah, but usually for trader, they would not go into here for short term. Huh? For medium term, because when you buy low, it may get lower. For example, at here, the red line may cross the green here over here. Do you see here? By cross, it go to another low. Yeah, so we worry, right? This cross here may go to another low here. So that's why this peak here ideally has to be higher than this peak. Okay, and this is roughly aligned to roughly $22. Yeah, that's why both short term and medium term, if you need extra safety, let it break above $22, right? It's not too far, 21.38 to 22, right? So, but all depends on you. Huh? Okay, the last but not least, the last one is the SGX. SGX, right, is a mild bearish from $12 fall down to around $9, right? So in fact, this $9 very attractive for the short term, but no one know the precise lowers. You buy 9, it may drop to 8. Buy 8 may drop to 7. So try not to catch the low, right? Instead, let the some higher so-called low, higher high is formed. Right now, I let Dr. T draw for you. Where's the higher low, higher high? Right? Do you see here? 1, 2, 3, 4. Do you see here? 1, 2, 3. Yeah. So this is actually quite positive. So that's why if you say, Dr. T, if I wait for the price to hit this the 20 days, can I E for entry if the next few days, it become here? Can, no issue. But the important question is, what if you're wrong the next few days? The market go against you. What if Biden says something, so-called harsh towards Putin, right? For the Russia, this Ukraine war, add the fuel to the fire, right? So what if fall down or even more than that? Will you get out? Yeah, so that's why trading, please follow trading rules. Investing, follow investing rules. Okay, but Dr. T, when to take profit, right? Follow the earlier method lah. If the price can go higher, next time you cross the green line again or 20 days, then you actually can get out again. All right, last but not least, right? We look at the medium term. Medium term on weekly chart, quite similar to just now UI or this Great Eastern, a bit weak, right? Because of the 200 days still trading down, right? But again, it's also not wrong, right? To actually go in. But if you want to achieve a bit safer, right? You can actually let it break this intermediate high here, huh? But this intermediate high here is around just now this 20 days is around 9.6. Okay, if you want to go above it, but from 9.6 there's an issue here, because 9.6, although the high here technically you can break the 9.87, but of this $10, because $10 is usually an important resistance. Of course, can break it is good, but if you go in even a break at the 9.8 something, because of 10 is a critical, a round number also usually is a resistance, more difficult to break. Yeah, so that's why you have two strategies. Number one, right, you can go in near to the 9.6 something, which is not wrong. This is the 20 days moving average, meaning the next few days can go above it, but you need to put a SCT, right? Or you can let it cross $10 first. And by the way, Dr. T cross 10 later, there's a false breakout, then you need to get out if there's a false breakout. Huh? Yeah, that's why some traders even let it cross certain resistance like $10, but let it retrace first. Right? If you can support above 10 when it go up. Yeah, but of course we are talking about those short-term trader or momentum trader. They buy high, sell higher. Yeah, because right now we got minimum this uptrend following. Although this uptrend here still a bit weak. Okay, to be fair, huh? Okay, that's why for the medium term over here, if you miss a last cycle, okay, you are hoping that it can swing up to the $12 to $13 again. All right. Number one, the SGX, unfortunately, the best of business in year 2020 pandemic, that one is hard to so-called duplicate again. Yeah, because during pandemic year, usually when crisis come, right, many sellers and buyers, right, will go in, right. So that's why the volume shoot up. Huh? But in 2021 and probably the 2022, the market become more normal, meaning you're back to the normal performance. Okay, do you think the regular performance, same as the three major banks, can continue to create a surge like 20% or 50% that kind of surge in 1 year? I'll say more difficult. Of course, it doesn't mean it's not possible, but since you cannot tell for trader, they let the price action, right, define. For example, you move your circle here, right? This one will point around 9.7. Let it break the 9.7, right? Although, right, some may even want to go higher. Huh? So I let you decide. There's nothing, there's no right or wrong. Okay. So HGX, okay, whether current this near to current prices to enter also okay, right? So you see the 6 stocks so far I mentioned got this short term, got medium term, got long term opportunities. But due to time constraint right now, Dr. T almost stock for more than one half hour. Right now it's nearly 10:30 already, right? So final reminder, right? Go and join my next webinar, which is a 4-hour session to learn this complete 10 strategies over here, right? Because today, due to time constraint, only 1 hour plus, right? This is a more detailed version. I'll share with you, more precise how to take action in the global stock market, not limited to Singapore bank stocks. And if you have a list of stocks to ask me, I'll actually be happy to cover that for educational purpose. Again, the website is ein55.com. Every month there's one session, but I only update one session every month, right? So try to make it for the next one on the 26th of February, right? And register together with your friends. So, and last but not least, I wish everyone safe and healthy, and also be wealthy as well in this year, new year of a tiger. Huh? Okay, with that, thank you very much. You can actually feel free to type your comment. Right, when Dr. T is free, I'll reply to that comment as well. Okay, so I'll stop the video recording here. Okay, and take care, right, everyone. Huh?